Gold prices just crashed. And if you own gold right now, this moment matters more than you think. Because this isn't just about price. It's about what you do next. One move can protect your money. The other can quietly erase years of discipline. And here's the dangerous part. Most people will make the wrong decision. Not because they're stupid, but because they're emotional. Let me show you why. Right now, headlines are screaming. Gold falls sharply. Silver down ahead of New Year. Is the rally over? And your brain does something automatic. It connects falling price with danger. That reaction. That instinct. That's the villain, not the crash. See, price drops don't destroy wealth. Bad decisions do. But here's the real problem. Most people don't even realize. They're reacting. They think they're deciding. Let me ask you something. Be honest. When you saw gold falling today, did your stomach tighten just a little? That's not logic. That's fear. And fear loves speed. It wants you to act now, before thinking, before checking why. But slow down, because here's what almost nobody tells you. Gold didn't fall because gold failed. Gold fell because expectations shifted. Big difference. Most people never separate those two ideas. And that mistake costs them money every single time. Now stay with me, because this is where the story splits. Imagine two investors. Same city, same gold price, same news, but totally different outcomes. Investor A sees the fall and thinks, I'm losing money. I should exit. Investor B sees the fall and asks, why is this happening right now? Same event, two mindsets, opposite results. And this is where smart money is born. Here's the first thing most people miss. Gold does not behave like stocks. Stocks reward speed. Gold rewards patience. Stocks are about growth. Gold is about protection. So when you treat gold like a stock, checking price every day, reacting to every dip, gold punishes you for that. Think of gold like a safety locker. You don't open a safety locker every morning. You don't sell its contents because the news feels negative today. You open it when there's a real reason. That's the analogy. Simple, clear. But here comes the next rehook. Because silver falling with gold is not random. Silver moves faster than gold. It exaggerates emotion. So when silver drops harder, it's a signal that fear is in control, not fundamentals. And fear never lasts forever. But don't misunderstand me. This doesn't mean never sell gold. That's another trap. Blind holding is just as dangerous as panic selling. The difference is intent. Let me explain. Smart investors ask 3 questions. Not 1, not 2, 3. Question 1. Did the reason I bought gold change? If you bought gold for long-term protection, has that reason disappeared? Or is it still valid? Question 2. Is this fall temporary or structural? Is this about short-term sentiment or a permanent shift? And question 3, the most honest one. Do I need this money right now? Most people skip these questions. They just react to price. And reaction is expensive. Let me paint a picture. What if you bought gold last year because inflation worried you, because uncertainty scared you, because you wanted stability? Now price falls. Has inflation vanished? Has uncertainty disappeared? No, only the chart changed. Selling now means your reason didn't change, but your patience did. That's not strategy. That's surrender. And here's the part nobody likes to admit. When you panic sell, someone calmer buys. Not smarter, just calmer. And markets reward calm. Now here's another rehook. Because this crash feels worse than it actually is. Why? Because losses feel twice as powerful as gains. That's human psychology. A 5% fall hurts more than a 5% rise feels good. Your brain exaggerates pain, especially with money. That's why checking prices constantly makes things worse. You don't gain information, you gain anxiety. And anxiety pushes bad decisions. Let me slow this down. Gold is not a daily decision asset. It's a cycle asset, measured in months, sometimes years. If you force short-term logic onto a long-term asset, you break the system. That's why most people lose. Not because gold fails, because they mismatch timelines. Now let's talk about New Year timing, because this matters. End of December is full of adjustments. Profit booking, portfolio reshuffling, tax positioning. That's selling pressure. Doesn't mean gold is dead. It means money is moving. Big difference. But headlines don't explain that. They just show red numbers. And red numbers trigger fear. Here's the villain again. Headline thinking. It makes you believe today's move defines tomorrow's future. It doesn't. Now imagine this. What if you sell today? Lock in fear. And gold stabilizes next month? You didn't avoid loss. You guaranteed it. That's the irony. But flip the scenario. What if you understand why you hold gold? And price noise stops controlling you? Suddenly, this crash doesn't scare you. It sharpens you. Because clarity feels calm, even in chaos. That's the hero moment. You're not here to predict prices. You're here to make good decisions. And good decisions come from rules, not emotions. So here's the truth. Say it with me. The crash is not the danger. Confusion is. If you know why you own gold, price drops don't control you. They test you. And people who pass that test don't panic. They position. That's the difference. Between panic sellers and smart holders. Earlier, I mentioned how panic-driven selling connects to long-term wealth destruction. But if you don't understand what's really happening in silver right now, then even the best gold strategy won't help you. So watch this next video where I'll show you how silver crashed 19%. Is this the end or the beginning?